Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq, back with our annual Singapore Fintech Festival coverage. Organized by the Monetary Authority of Singapore, the Singapore Fintech Fest is on 6th edition. We're proud to be a media partner for the 4th year in a row. Joining me for the segment is Michael Karbouris. He's the head of strategy for Nasdaq Anti-Financial Crime Technology. Michael, it's great to see you. Welcome to Trade Talks.
Thanks for having me, Jill.
What emerging technologies have you observed in DeFi, and what opportunities do they present for the capital markets and financial services?
Yeah, well, what we see in DeFi today is just an incredibly fast pace of innovation. The space is iterating very quickly, and it's evolving at levels we've not really seen in the past. DeFi, of course, has no intermediaries. It's largely self-regulated and now has well over 200 billion in value locked in its various protocols. So it's a large and growing ecosystem. With respect to opportunities, I think it's fascinating to watch what is basically a new and novel financial infrastructure start to form, and with largely all of the financial primitives that we have in the traditional world today. So trading, lending, borrowing, collateralization of assets, and so on. On top of this now, we also have the innovation in non-fungible tokens, or NFTs, where if you look at the traditional world, lots of efficient technology infrastructure has been built around fungible assets, such as shares, but not a lot has been built around non-fungible, such as property titles, car rental contracts, these sorts of things. And now we start to see in DeFi the growth of the same financial primitives for NFTs. So issuance, lending and borrowing systems based on collateral, trading, and so on, which is also fascinating to see how that might unlock value in a host of new asset classes. Now, how far the traditional financial worlds and the DeFi worlds can converge now and into the future, I think will largely be defined by how nation states in the industry approach regulation. So it's going to be interesting to see what regulatory and technology solutions might evolve to solve for the challenges ahead, and fascinating to see how they will reconcile the differences between, say, the disintermediation that DeFi offers and the regulatory standards that we apply to protect the financial markets today.
Right. And Michael, what challenges are the regulators in the industry seeing with these new decentralized technologies?
Yeah, I think for the traditional financial industry to really embrace DeFi, there are a number of challenges to solve. The first is accountability. Because there's no intermediaries in DeFi, there's no one to go to in the event of a rug pull, a scam, a hack, or any other disaster. You just have smart contracts, which on their own may never be sufficient in the eyes of the regulators. The second will be resiliency, which is critical. If you're providing institutional access, you need to show and prove that you can recover from technical outages or major attacks. There needs to be certainty that the show goes on. And if there's a major exploitation of an underlying protocol or a blockchain, it won't cause that entire ecosystem to collapse. And given the fact that crypto is 24/7, 365 days a year, the need to get resiliency right is probably even more of a challenge. I think lastly, and extremely important to get right, is compliance. Like, regulators want protection against financial crime and some form of certainty that money laundering, fraud, and things like terrorism financing are not being committed. So without these things, you end up with all sorts of financial crime risks and systemic risks. And ultimately, I'd expect that the regulation in at least these areas will define how far traditional financial institutions might be able to use DeFi themselves or offer DeFi to their customers.
So how can technology help the industry solve some of these challenges of accountability, compliance, resiliency, and what will the technology solution and the landscape look like?
Yeah, you might expect to see a ton of institutions moving into DeFi given the opportunities on offer. So yield generation, one sort of obvious example. But I think in the US, at least, institutional adoption is more likely to be sort of measured as the industry waits for more clarity from the regulators. We want confidence in markets, and we believe that to inspire confidence, we need fairness, we need transparency, and market integrity as cornerstones of the market. So even before regulatory clarity exists for something like DeFi, the industry should explore solutions that help solve some of those compliance and accountability challenges we just talked through. So if you look at those solutions that the industry is exploring, you see a couple of approaches. We see some approaches along the lines of adapting existing laws to crypto. So for example, KYC or some sort of accreditation layer at the protocol level, which can be applied to customers and transaction counterparties and so on. So that sort of approach brings traditional banking type regulations to the crypto industry. And for the most part, it applies to centralized financial service providers. But even in the fully decentralized DeFi world, the industry's made some pretty major progress already in the monitoring of blockchain transactions and in things like beneficial ownership. So there are excellent tools today to help identify bad actors in crypto. And those sorts of tools are getting better and they're evolving. So they can be effective even when it comes to things like a sophisticated DeFi user or in a cross-chain or a multi-layer one world. So the tools that are going to provide regulators with comfort are also evolving. Overall, I think the question, how do you fully regulate decentralized software? It's a hard one to answer. It's different to regulating the flow of funds in, say, a centralized ecosystem. And when it comes to DeFi, the situation gets nuanced. Another aspect is that for many in the DeFi industry, an important question is there any way to hold the DeFi protocol accountable to the same safety standards that we have and we enjoy in the financial markets today without losing the freedom afforded by DeFi? And how do we reach a reasonable compromise? I think the truth is that we really don't know exactly what this will look like as it unfolds. But the passion of the builders in the space and the growing audience of users, combined really with what is opportunity overload, I'm optimistic will lead to solutions where we'll see the traditional and the DeFi world start to converge over time, and with fairness, transparency, and market integrity.
Right. It's encouraging to hear, Michael. We appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.